Hey, what's going on, guys? In today's video, we're going to be talking about Roth IRAs and whether or not you should have one. With the new stimulus bill finally passing and $1,400 stimulus checks starting to be sent out as early as this weekend, I'm sure some people are looking to invest that money into the stock market. So we'll go over whether or not you should put that money into a Roth IRA by comparing it to some other options like a standard brokerage account. Roth IRAs are recommended by what seems to be everyone as the best type of investment to have if you want to retire a millionaire, but I don't think that everybody fully understands them. So we'll go through them and talk about some different pros and cons to this type of investment. So by the end of the video, you will know exactly whether or not this is the best option for you. So the first thing that we should hit on is, what is a Roth IRA? Well, IRA stands for Individual Retirement Account, and there are a few different options when it comes to these different types of accounts, like traditional IRAs, Roth IRAs, 401ks, and stuff like that, but they're all a little bit different. And among new investors, these types of accounts are often confused with something like an index fund. But a Roth IRA itself is not an investment, it's simply just an account, which then you can go in and buy different stocks, mutual funds, ETFs, index funds, and stuff like that. So everything that you put in your Roth IRA are your investments. So let's start with one of the pros to having a Roth IRA. The main reason that these types of accounts are so popular among investors is because of the tax advantages that come along with them. When you invest your money within a Roth IRA, you're then able to grow and compound that money completely tax-free. And the best part about this is that when you're 60, 65, 70 years old and you want to start taking money out of this account, you'll be able to take out this money completely tax-free no matter what your tax bracket currently is. And this is absolutely huge, right? Having money in an account that is growing every single year alongside the stock market, then being able to take the money out down the line without having to worry about taxes is absolutely amazing. And that's why these Roth IRAs are so attractive. Now, if you were to use, say, a brokerage account like Robinhood, this would not be the case. The standard brokerage accounts do not offer any form of tax advantages, and with these accounts, you'll have to pay taxes on any money that you make from your investments every single year, just as you would with the income that you make from your regular job. And these gains that you make from investing will be taxed as capital gains, and at times they can be pretty heavy. There are two types of capital gains. You have long-term capital gains and short-term. Now, long-term capital gains aren't as bad. These are investments that you've held for over a year, and depending on your tax bracket, you're taxed at a much more favorable rate of 0, 15, or 20%. However, what gets you here are your short-term capital gains or investments that you've held for less than a year. And this especially affects day traders or active traders who are consistently buying and selling stocks on a daily or weekly basis. Money that you make from these investments is taxed just as ordinary income, so you're gonna have to check your tax bracket, but at times it can be much higher than 20%. That's definitely something you should take into consideration from a tax perspective when deciding which account will be right for you. As of right now, this might sound too good to be true. You might be asking yourself, why would anybody have a brokerage account when you can just have a Roth IRA and pay $0 in taxes? But there is a lot more that goes into it, so let's get into some of the downsides to having one of these accounts. So one major drawdown is that you can only deposit $6,000 a year into this account. And this can be a big problem for people who are looking to actively contribute to that account every week, because unfortunately you will be maxed out at $6,000 a year. With a brokerage account, you can add as much money as you want. You could add $6,000 today, $6,000 tomorrow, $6,000 next week, and have absolutely nothing to worry about. Now, there are some ways around this, and what a lot of people do is max out their Roth IRA by depositing $6,000 a year, and then if they have extra money on the side that they want to invest, they can just put that into another account that doesn't have these type of limits. And this is a pretty good strategy because you can have as many accounts as you want. You know, just because you can only put $6,000 into your Roth a year doesn't mean that you can't open a TD Ameritrade account and just invest the rest of the money there. Another downside to having a Roth is that you cannot trade on margin, and if you're looking to trade options, your ability to do so is fairly limited. These accounts are designed to be more on the safer side, so there aren't many ways to lever up your account, meaning that whatever you deposit is what you're going to be working with. With a brokerage, you can use a margin account, which will allow you to trade with double or sometimes even triple the amount that you deposit. So say you deposit $10,000, your brokerage will generally match that, giving you $20,000 worth of buying power. And you will have to pay interest if you decide to tap into some of these borrowed funds, but the option is still there and it is not with a Roth. And the same goes for options trading. If you do have your own account, you can really do whatever it is you want in the option space, whether it's buying or selling puts and calls debit spreads, iron condors, or whatever the strategy might be. But with the Roth IRA, you're gonna have to check the details within your account, as most of these different option strategies are just not allowed. And you can take that as you will. Some people might think that this is a good thing, especially those who struggle managing their risk, but I'll list it as a downside just because you don't have the option. All right, now the last major downside to a Roth versus a brokerage account is the access to your funds. And this is something that a lot of people tend to mix up with Roth IRAs and traditional IRAs, because they do seem similar and they have a lot of similarities, but they do have different rule sets when it comes to withdrawing funds from your account. If you do have a traditional IRA, which is different from a Roth IRA, you cannot withdraw any of your funds until you're at least 59 and a half years old without paying a fine, plus taxes on the amount that you decide to take out. However, this is different with Roth IRAs because these accounts allow you to take out whatever that you personally deposited without penalty. So if you did deposit $6,000 into your account and then say it grew to $8,000 later that year, you are still able to withdraw that initial $6,000 without paying any penalties or tax. And the reason for this is because when you put money into a Roth IRA, that is money that you have already paid taxes on, which then allows you to withdraw that money in the future without having to pay anything. And the thought process of investing your money into a Roth is that it's already been taxed, and the only tax that you pay is based on whatever tax bracket you're in at the time when you deposit. So say you're 25 years old making $75,000 a year. You'll pay taxes based off your $75,000 income, but if you were making more money 10 or 20 years down the line, naturally your tax bracket will shift and move up. But since you've already paid taxes on the money that you invested back when you were making $75,000, that's kind of where your tax break comes from. So you do have to pay money up front, but once you pay and then you invest the money, you're good and you won't have to worry about paying additional taxes despite how much your income increases over the years. But if you do have a traditional IRA, you will have to pay taxes when you decide to take that money out down the line. And that's because you don't pay taxes on the money that you put into this account beforehand. Now, this could be seen as an advantage because at the time when you're looking to deposit, you don't have to pay any taxes, so you kind of get a tax break there. But then you will have to worry about paying taxes when you're 65, 70, 75 years old when you take the money out. So I know that that's all pretty confusing, but hopefully it did make a little bit of sense. But just to summarize, you can take money out of your Roth IRA that you deposited, but you're not able to withdraw any of the gains that you made without paying a fine or penalty. So if you plan on using your gains from trading to pay bills or as a primary form of income, this probably isn't the best type of account for you. So there's a quick rundown of some of the up and downsides to having a Roth IRA. Just to bring it back together one last time, a Roth IRA is very attractive to investors because of the tax advantages, and the money you put into this account has already been taxed, so over the years it will grow with the market, and once you take it out in the end, it will be completely tax-free. And the major downsides to this account are that you can only deposit $6,000 a year, you can't trade on margin or use options for the most part, you're not able to withdraw any of the gains that you make in this account until you're at least 59 and a half years old. So hopefully comparing this type of account to a brokerage account gave you guys a better idea of how they match up and how it compares to all the different options out there. But if you guys do have any more questions, please feel free to let me know in the comment section below, and I'll go through and answer every single one of them to the best of my ability. If you're still here, thank you for taking the time to watch all the way through. Hit that like button if you enjoyed this video and hit that subscribe button to join the team, and I will see you guys next time. Peace.